Hello friends, and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Exide industry. Is it a buy at these levels or an avoid? So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Exide Industries, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel and help you also ask me questions and ink out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. Also, if you can pay $100, then you get 1 year access by paying for 10 months. For detailed market or company talk or a number of stocks you're holding, you can directly email me. And also, if you cannot pay on Patreon, you can join the YouTube membership. That's a monthly membership through Google Pay or other mechanisms. You can definitely buy YouTube membership, and you get all the benefits of Patreon on YouTube. Instead of the 4 exclusive live sessions, I provide 4 exclusive result videos for both Patreon and YouTube members. Now about the company, established in 1947, Exide provides automobile batteries for 4 and 2 wheelers and is a marquee brand in auto ancillary, and it has top clients and strong retail reach. Probably every one of you might be knowing about Exide, using them in your car as batteries, and now Exide is also foraying into you can say the EV space, electric vehicle space. They also provide industrial batteries, UPS batteries, and solar batteries across segments. The market cap of the company has declined over the last 6 months to 14,000 crores. It has prominent global presence, so the valuations are attractive. The way the stock has fallen, I'll discuss about that later on. Plus, the business getting into EV going forward would also benefit. So if you look at the numbers, and these are Q2 numbers, September quarter numbers, which have been pretty decent in terms of sales, which went up by 15%, but profit dipped by around 25%. Interest cost has increased, plus raw material cost has also gone up with oil prices and other raw material prices going up. Uh, and that's why there have been pressure on margins. Operating profit margin is around only 10-11%. It used to be around 14-15% a couple of years back. So there are pressure on auto and auto ancillary companies at the moment. Decent promoter plus institutional holding with 21% free float, that is a positive, and it is a brand that is, or it is a stock that is being bought into by mutual funds and DIIs a lot. So it's not something that is not being watched by large players. So, what has been the reasons for disappointment? Global auto slowdown has marred the industry altogether over the last 2 years, and it is not quite going away. So, many of the industries have come back to life, but automobile sector hasn't gone up in that manner, and it has faced a lot of headwinds. Whether it is cost pressures because of raw material prices or because of shutdowns in many of the countries. Domestic sales have slumped and is not quite at they are not at the same level as 2017-18 was. So probably it will take a year or so to everything for everything to come back. Raw material cost, as I mentioned, oil prices soaring plus other raw material prices getting up, metal prices going up. These are all accumulatively negative for the industry, and the margins have shrunk, and that is why the stock has not moved up appreciably. Plus, competition has also increased. So there are other brands like Amara Raja in the listed space. Plus, there are other you can say global brands that are available that are not listed. So unlisted players in the organized segments are also posing a lot of threat for the battery industry at the moment for Exide. So next 2 quarters could be tough. The way things pan out with the next, you can say, the pandemic not settling at the moment, and there could be a chance of a third wave. So these things will affect the sentiment, and market is always forward looking. So due to that, I think for the next 6 months the stock could be in a range. If you look at the technicals, then the 200 DMA is around the 180 levels. At the moment, it is below 200 DMA, extremely weak technically, have been consolidating for few weeks and declining as well. It has declined around 5-7% over the last couple of months. It has declined a lot over the last one to 2 years. It is down 50% over a 2 year basis if you look at it, between 50 to 60%. See, the big up move is expected above 205, 210. So we are way below that. 155 is a very strong support on the lower level. So if that gets broken, we are looking at 120. But at the moment, the stock is around 160 to 163, probably 4-5% lower from here. It should get some support and it should consolidate for the next few weeks. So what needs to be done, in my opinion, you can buy over the next 6 months. So as I mentioned, next 2 quarters could be tough. You can buy some here, buy more on declines, buy more on up move, and probably from FY23 onwards, you'll see numbers picking up. So recovery may take at least 2 quarters from here on in. So you'll get ample time to accumulate the stock and hold it for the next 2-3 years. I think auto ancillary should do well for the next couple of years, post the next 3-4 months of difficulties. So this was my video on Exide Industries. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it, and kindly support me on Patreon on YouTube. Thanks a lot for watching.